Good evening, traders. This is a DAX recap video for Wednesday, January the 23rd. In front of us is the updated chart with the zones that was posted before the open, together with the morning nose. So, World Economic Forum in Davos starts today, but what is important for us when we are trading with technical analysis is that DAX has tested this breakout area yesterday in the after hours. Then the idea could be that DAX could be trading now here between our main support and main resistance zone and form a new trading range, and that staying below this here zone with the previous cash close could probably mean another test of the breakout area, and that is exactly what we got immediately after the open. Let's get now to the charts. First, we are going to observe in this chart what are the main zones. This is the main support zone, this is main resistance zone. This here is the trading range from yesterday. Yesterday low, yesterday high. And we have zones based on that. Yesterday high zone, we have main support zone, breakout area, which is also a yesterday low zone, and inside we have one minor zone, one zone that is better than this minor zone, because inside of it we have previous cash close and pre-market high. As I said before, not every zone is the same, but every single one of the zones that you will have on your chart that comes from me will have three jobs. One job is to give us an entry, second job is to give us an exit, and third job is to help us to gauge market strength or weakness. If it doesn't do any of that, then it should not be on the chart at all. So what happened immediately after the open? We could place our pre-market high and low lines as additional references. Pre-market high was made around 3 a.m. and pre-market low was made immediately before the open. So after the open, market just tests basically to the point yesterday low and top of our support zone. And this is the main support zone for the day. These main areas, they are large time frame areas where you should not be picky about where to enter, on top, in the middle, at the back. You just enter. There is nothing, absolutely nothing to think about that. You just enter along here because this is a main support for the day. And what is the worst, absolute worst scenario that can happen? You can lose -1 air. But on the main support or resistance zone, there should be at least a 2-hour potential for that trade. So this here is a long, and exits should really be thinking like market is going to fill a gap. You can also exit here for a smaller target, but when you were trading from the main areas, I look to try to get some more, and when the markets starts going into the profit, you can play a defense, cut down your stop size, or put the stop on break even if you are if you have a really good position, but better not to push on break even early, because market can retest your entry. We shall see examples of that a bit later. So you could close partially or entirely here if you want to take some quick profit, but basically it would be a good idea to close near cash close. Much better idea. And from the entry point you could get 70 or 80 points of profit, and it is our first trade. Second trade is to short previous cash close, and when you are shorting that, you already should observe that the market was tested previous cash close in the pre-market session. Here when they made pre-market high, they were testing it and made the move to the downside. Now they are testing it again. And when you are in from the cash close and you have a zone and pre-market high, invalidation point is here above pre-market high. So you're in on this first test. Now you observe that market is testing your entry, going below, and it turns out to be just a small reaction for like 20 points. Then it comes back, and now you should really decide, should you be stubborn about it. In that case you will lose -1 hour. So again, not a big deal, you will lose -1 hour, but in this case you should really think, is the market going to the yesterday high zone, because it came to the upside from the main support zone, and you could close this for break even or a small loss, or even a few points of winner, but anywhere around break even, to just scratch this trade, because it made a small pullback. And even if you lost on this one, no big deal, because the market is going to test a better zone. Now this is the zone that as you can see, market spent a lot of time on it. If you are going here on the first test, this market make the small pullback, they made a higher high, but still line in the sand for this zone is above the zone, above yesterday high. If you are shorting this zone, your stop must be above or behind the invalidation point. That is something that you should always keep in mind. Never to use artificially stop loss, as that is one of the top 5 reasons why traders lose money, because they want to get into the position with artificially small stop, and they are going to be stopped even if they're right. For example, you're entering here and your stop is just 1 point behind this swing high, and on next test you're out just to see that market went just 3 points or 2 points above your stop. That is very frustrating. It's much better to use wider stops for that same reason. And high of the day, yesterday high was here, so stop must be behind that. And either you are here and you observe this, and then the market tests your entry, maybe you will put your stop on a break even and got stopped out on a break even, but then you should really, when this here continues, this theme continues, that the market cannot go above, you should go short here again, and your target should be at least previous cash close. So this is your number 1 target, and then you can use this minor zone as a second target. And again, a very good trade was here. And then after all that happened, we had additional trading, additional shorting opportunity, and this is here. The market goes straight line. We have momentum, we have a good push after this here consolidation. And why is that? Because this is the place where the bears and bulls were fighting for domination, and all of these traders who got on the wrong side must close, and they are closing, and you have a stop runs through this area, and this is the move. This is how it looks like. And when you have this kind of move, there is the way to go on the continuation type trade, which in my opinion are the most easiest trades of all, where you have a good push through the zone, through the reference points, and pull back to it. And additionally, you can use Fib to observe this. It correlates with the 38.2 Fibonacci retracement. You have zone, Fib, and test of the cash close. And this is additional short opportunity targeting now this same zone or pre-market low, because when you have this kind of move, then you should really expect the market to test pre-market low again, or maybe even again, as we see now that it's happening now at past 6 p.m. And this is our exit here. And that was our day trading opportunities in the regular trading hours. Now let's observe a bit situation on the higher time frames. On the 4-hour chart. This here could be a lower high, and this main support zone for today could be in danger of breaking down. It will depend of what the US markets are going to do. As you can see, they are testing their own zone now, and the line in the sand for them, in my opinion, is this round number here, 2600. And for tomorrow you will get an updated chart with the adjusted zones. I wish you good trading and good night.